Welcome to the Deep Dive. Today we're ripping into the Q3 2025 earnings materials for the world's biggest chip maker.
Yeah, we're digging into the numbers, the guidance, and the strategy behind that massive AI growth.
Let's jump right in. Headline performance. Record results. Smashing their own guidance again.
Absolutely. It wasn't just good, it felt like a statement.
Okay, the core numbers. Net revenue. US $33.10 billion. That's actually a bit ahead of their $31.8 to $33 billion range.
Right. And look at the growth rates.
10.1% up from last quarter. And get this, 40.8% year over year in US dollars.
30%. At their size,
They
it tells you demand for the top tier stuff is just relentless. Inventory correction clearly over.
And that feeds straight into profits, right? Net income up 39.1% year over year.
Huge jump.
And earnings per share, the number everyone watches, NT $17.44, that's new Taiwan dollars, up 39% from last year, 13.6% quarter on quarter.
Solid, very solid.
But, okay, revenue is strong. The real shockers seem to be the margins.
Oh, definitely. Massive beat there. They guided gross margin between 55.5% and 57.5%.
And they hit
59.5%.
Wow. So 2 full percentage points, 200 basis points above the high end of their own forecast.
Exactly. That screams pricing power. Demand for those advanced nodes is just that strong.
So why the big beat? What did they say?
Well, they mentioned cost improvements, better internal efforts there, and high capacity utilization rates, obviously.
Makes sense. But wasn't there a currency tailwind too?
Yes, that helped. The actual exchange rate in Q3 was 29.91 NT dollars per US dollar.
Okay.
Their guidance assumed 29.0. So, yeah, a more favorable rate when converting those international sales back definitely gave margins a little extra juice.
All right. So given that huge Q3 beat, let's look ahead. What's the forecast for Q4, the current quarter?
Okay, guidance.
Revenue expected between US $32.2 billion and US $33.4 billion. The midpoint there is kind of flat, maybe even slightly down sequentially.
Yeah, sequentially it looks flat-ish,
Yeah.
but you have to put in context.
Right.
That's still a massive 22% jump year over year. So after that huge Q3 ramp, holding steady sequentially is actually pretty strong. Shows the underlying demand is really resilient, offsetting normal seasonality.
Okay, fair point. And the margin outlook, they seem pretty confident those gains are sticking.
Absolutely. Gross profit margin guidance is 59% to 61%.
Sure.
That midpoint is even slightly better.
Why so high?
Continued high utilization, for one. And they're assuming an even more favorable exchange rate for Q41 USD to 30.6 NT dollars. That helps lock it in.
Got it. And operating margin?
Also expected to stay really elevated, between 49% and 51%.
So pulling back to the full year, 2025 overall, what's the big picture view?
Management expects full-year revenue growth close to the mid-30s% range in US dollars.
Mid-30s, that's blistering for a company this size.
It really is. And it's all driven by that relentless demand for their leading-edge chips. The AI boom is just forcing the issue, performance and capacity above all else.
Which brings us right to the tech mix. Where's the money actually going? What are customers paying these prices for? It's all advanced nodes now, isn't it?
Pretty much. Advanced technologies that 7 nanometer and below accounted for 74% of their wafer revenue in Q3. 74%.
Wow.
Breaking that down, 3 nanometers was 23% of wafer revenue, 5 millimeters was the biggest chunk at 37%, and 7 millimeter was 14%. People are moving to the cutting edge faster than ever.
And the end markets. High-performance computing, that's where the AI chips live, 57% of revenue. That was flat compared to Q2, interestingly.
Yeah, but look elsewhere.
Right. Smartphone bounced back strongly, up 19% sequentially, making up 30% of revenue. And IoT and automotive also saw really strong sequential bumps, up 20% and 18% respectively.
So AI is still the main engine, clearly.
Yeah.
But the other markets, the non-AI stuff, they're showing real life now, moving beyond just a mild recovery.
And because of that broader strength?
They're actually feeling even better about the AI accelerator market's growth. That CAGR forecast, 2024 to 2029, they now see it as slightly better than the mid-40s% range they talked about before.
Okay, now here's a really interesting strategic point. The CEO talked about Moore's Law is dead, but not in a negative way.
Right. It wasn't like, oh no, we're doomed. It was a pivot, basically saying, look, just shrinking transistors gets harder and harder. So performance gains now come from the whole system.
Meaning?
Meaning you need innovation across the board. The front-end chip itself, yes, but also the back-end assembly, and crucially, advanced packaging things like CoWoS. Putting it all together efficiently is the new frontier, especially for these complex AI systems. It's not optional anymore, it's how you win.
And focusing on that whole system takes serious cash. They are betting big on this. That CapEx number, it's huge.
It's truly mind-boggling. They narrowed the 2025 CapEx guidance slightly, but it's still US $40 billion to US $42 billion.
40 to $42 billion.
Yeah. Just for perspective, $42 billion. That's like the entire annual GDP of Costa Rica or Panama. Spending that every year, that's immense confidence in future demand.
And the spending breakdown shows the strategy right
Yeah, exactly. Around 70% of that massive budget goes straight into advanced process tech, 3nm, 2nm, whatever's next.
now. Okay.
But critically, 10% to 20% is specifically for advanced packaging, testing, mask making. That directly supports the whole system approach. You can't make N2 chips if you can't package them effectively.
Speaking of N2, their next big node, what's the timeline there?
N2 is on track for volume production later in Q4 2025, so pretty soon.
Right.
And they expect a faster ramp-up in 2026. Demand from smartphones and HPC AI is driving that.
Is there a bottleneck?
Well, the advanced packaging capacity, especially CoWoS, that chip-on-wafer tech for stacking AI chips, is very tight, their words. They're working like crazy to build more capacity for 2026 to close that gap.
And this expansion isn't just happening in Taiwan. They're building everywhere.
Yeah, driven by customer needs, government incentives, geopolitics, you name it. In Arizona, they're actually speeding things up.
Oh, really?
Yeah, accelerating capacity and planning to bring in newer tech faster, like N2 and beyond. Specifically because US AI demand is so strong, they even grabbed a second big plot of land nearby, just for future options.
What about elsewhere?
Japan, the Kumamoto fab, started volume production late last year, apparently with very good yield, which is great news. And construction's underway in Dresden, Germany for that specialty chip fab.
Now, these overseas fabs were expected to dilute margins because they cost more to run, right? How's that looking?
Interestingly, they actually narrowed the expected gross margin hit for 2025. It was forecast to be 2% and 3% dilution. Now they're saying 1% to 2%.
Huh. So it's proving slightly less expensive, or maybe they're managing it better initially than they feared.
Seems like it. Maybe stronger early operational control. Though they still expect the long-term dilution, once everything's fully ramped up, to be in that 3% to 4% range. But for now, a slight positive surprise.
Okay, so huge investments, but what about the overall financial health? Is this level of spending creating risk?
Doesn't look like it. Their balance sheet is rock solid. Current ratio is strong, 2.7x. They're sitting on a mountain of cash and marketable securities. NT, $2.75 trillion.
Wow. Okay.
Yeah, they have the firepower to fund this CapEx push.
And inventory. That was a big worry across the industry last year.
Looks much better now. Inventory turnover days actually decreased slightly, down 2 days to 74 days. Management basically said inventory levels are back to very seasonal and very healthy.
Good sign.
Yeah, they pointed to strong execution,
Yeah.
getting those N3 and N5 chips out the door. So fewer worries about customers hoarding chips they don't need immediately.
Okay, final area. Risk. Geopolitics, particularly China. Analysts always ask about this. Any concerns that restrictions there could derail the whole AI growth story?
You know, the CEO sounded very confident. Acknowledged, yeah, opportunities in the China market might be limited, but expressed real certainty that they can still hit that mid-40s AI growth CAGR, maybe even beat it, just based on the strength of demand from their global customers, the big AI players outside China.
So the takeaway is that global AI demand is just so strong, it can basically absorb any potential headwinds from one specific region.
That seems to be the message, yes. The momentum behind advanced AI compute right now is just incredibly powerful. Regional issues don't seem to be slowing the overall train much, if at all.
So wrapping up this deep dive, Q3 wasn't just a beat, it felt like a power move. Margins show incredible pricing leverage, and the strategy is crystal clear. Double down on everything needed, CapEx, packaging, global footprint, to capture this AI wave.
Absolutely. And that leads to a really fascinating, maybe slightly scary, final thought for you. The CEO dropped this incredible statistic during the call. He said the actual token volume, the raw measure of AI computation happening globally, is growing exponentially, almost doubling every 3 months, he suggested.
Every 3 months?
Yeah. Now think about that. That rate of growth blows their own already impressive mid-40s AI revenue AGR forecast completely out of the water.
So computation demand is growing way faster than their revenue from selling the chips for it.
Exactly. Which implies that technological improvements, moving from N3 to N2, making the whole system more efficient, better packaging, they have to keep delivering massive gains in performance per dollar and performance per watt, just to keep up with the world's insatiable, exponentially growing appetite for AI.
So the question is,
How long can silicon innovation, even their amazing system-level approach, keep outpacing that kind of exponential demand curve before we hit another wall, another massive capacity crunch? Something for you to think about.